Good morning. Well, quite a little bounce off of the lows there. I think this was on news about wages going down a little bit. Employment cost index. There's a little bit more evidence of slowdown, and I suppose hopes of no or fewer increases in the Fed funds. And let's see where this bounce is in relation to yesterday's reversal bar. And you can see my cursor there. It finally got down to this low overnight. Remember, yesterday we were looking for this momentum, early in the morning to eventually, yesterday to get down to this little pivot low here. It's not marked as a pivot, but you can see that reversal there. And it didn't get down there yesterday. It was like a slow, painful grind lower, as you can see here on the 15-minute chart. Lots of overlapping bars, but attempts to pop up were sold, eventually went down. So clearly sellers were in control, but not in a big way. Like you can see here first thing in the morning. And it was like a little retest pattern. I can flip this back here without taking too much time. Here pre-market, and then, it went up, and then eventually, it went down with that momentum. And when I see something like this kind of strong momentum, my expectation is based on historical patterns, is that while it might bounce a little bit, it eventually comes down and it makes a lower low into the area where buyers are going to be more aggressive. And then from there, it stabilizes and you get a counter trend rally. It didn't do that. You see, it just went sideways, 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 sideways. And then, this grinding move to the downside, and, here breaking down and then flipping up and then back down again. So it's just, unless your plan is one in which you're going to give things substantial amount of room for, a small time frame like that, it's just pretty, well, for myself anyway, not a desirable pattern to be sitting through, because the uncertainty here is like, well, how do you know it's not coming all the way up here and you had this profit? So it is what it is. Certain days don't line up with maybe your personal preferences, but so on. So we're looking at the cues here and the bounce up. This is where the strength has been. And so these kind of moves, while they do get up to the top of the range, rarely turn on a dime. Very rare. So yesterday's gap down near the low of this range expansion green bar was bearish. Surprisingly, again, it didn't get down to this low yesterday. So showing some relative strength and resilience there, even though it was trending down all day. And what typically happens now, and we'll see, this is news-driven market, the Fed thing coming, we all know, and whatever earnings reports. This kind of a pattern typically comes back up. Not necessarily from here, could have been a little lower, but typically you get a retest, and that's where you get a larger area of resistance or supply being built up in the moment in the same area where there's a reversal, and that's where you could get a more substantial move lower. And we'll see how that unfolds, whether it goes sideways here and lower. I don't think so. Even though the retracement was 100% back up to the top of this nasty reversal bar right here on the weekly chart. And we got a range expansion last week, which historically sets up a slowing in momentum and some corrective pattern. We'll see how this week unfolds, of course, and what happens here with the news. I'm just pointing out, not to get too aggressive with one reversal day after this type of strength, even though it's at resistance. Not as you're going to give it a whole bunch of room, but once this should form some kind of a more convincing topping pattern here, is where you'd get a more substantial move lower. In addition, any type of reversal or topping pattern, even if it's on a 5-minute chart, the retest going sideways over time moves it away from these reference points. So that in of itself makes it the potential greater for uh, a larger move lower. We'll see how this plays out. 4085-ish on top. Yes. Well, let's go through it. Let's go through it. So spiders, the same, more bearish gap down, it gapped under the low. Still, eventually got down to here, but not down into this little congestion there where it stabilized. The same bounce. Look at the cursor. So you see this kind of a bounce. You got to put it in perspective of a bigger time frame. And when you look at where this is on the daily and hourly chart, it's like, okay, really not a big deal. On a 5-minute, yeah, that looks like it pretty impressive. But in the context of that hourly chart and daily chart, yawn. Right? So no biggie, just a reaction to news. And what does it do from here? Intraday, same story as what I just explained, beginning to reverse, some sideways price action. It might go higher toward a larger area of congestion. Let's see where this is here. Yeah, so let's pivot high, that area, 403-ish, this larger area of congestion. And those of you that maybe use things like, what the hell you call it? Market profile, intraday, or VWAPs, or volume profiles, and all of that. All of these overlapping bars, any of those things have to be in the area of this, because this is where the majority of trading occurred yesterday. So common sense says that's where the majority of the volume occurred, because you got a whole bunch of trading over hours. And that's where there's congestion. So points of control and all of that kind of stuff. Everything always comes down to looking to the left. That's an interesting expression, McGraw. The turd in the punch bowl. Okay. All right. So where are we at? I'm looking at the daily chart, SPY in the middle of the red bar. And that's how we get an idea. Where is SPX when we put that in relation, which in the index that doesn't give us the pre-market data, just to see where that is, and then relation to where support and resistance is, and where we'd be comfortable selling credit spreads. So middle here, let's just drag this down here for now. And so, right, as mentioned to me, 4085 from here. Other than news risk, just looking at the chart, that should be a no-brainer. Is there juice there? Yes. 80 by 90. So if this continues to push up pre-market, maybe, you can get to 4090, which is only 50 by 60 right now. But if there's a little bit more, near those topping tails, either way, I think it's a no-brainer that it's not going to get up there after this reversal. Now, if it was Fed day and it was 2:00 and, and so on, it's like, well, we don't want to take that kind of risk. Yeah. 3970, Jake is telling me 39. That should also, that's, in my opinion, is a no-brainer, especially with the move up. 3970. Which that is suggestive of an iron condor day. Is today going to be a trading range? And that does make sense based on yesterday's down move and the pre-market move up, that it would stay, above this area. I'm seeing my cursor is on the daily chart, and look where that lines up on the hourly chart. So we always looking at what's our lines of defense, right? What could stop something to going to a strike when we're doing a credit spread? Well, one is a whole number of 4,000. That's always going to be a stopping point on in this case on the way down. But there's a void, but that whole number is going to have an effect. And then down here, for sure, if it was to climb down there rapidly, buyers are going to step up. So while it's not the same thing as 90, 39, 70, you're close enough to saying, you know what, can I hold my breath here? If that was happening, does it make sense? So we can't get premium down here below it, but the probability of it getting down there when it's, look at my cursor, based on where SPY is here, get all the way down there, something horrific news would have to come out to drive it all the way down there in one day. But there is the void. And to get back up above here, well, I think that's unlikely as well. And you got a line of defense up there too, of that pivot high on the hourly chart. So that looks good. And I'm looking at it, what McGraw is saying and Alex in the green room about a 15-point difference between ES and SPX. Years ago, McGraw, I don't know if you've looked at this, but I read about, I think, between SPX and the futures, measuring that difference. And historically, there is an extreme between it getting tight and wide as a reference to a turning point. I don't remember what the data said, but you might want to look into that since you're mentioning it. Well, there's some consistency as to the futures being greater than the current in SPX. There is some historical references as to it getting wider and smaller. Yeah. All right. Futures. So bouncing off of the support, I'll say it again, look to the left. It's an area. You got a couple of pivots there. Not like it's got to stop right there. It gets a little below it, the little congestion, a little minor, it's been trending all the way down. It gets to its destination and it pops back up. And this is where, as it gets to the destination on your higher time frames, you go down to the smaller time frame and you start to look for a pattern that supports your bias. And here, breaking the lows, wide range bar up, a violent turn, and you got resistance, so on and so forth. What we do day to day. S&Ps, same story. This broke through. And so here there's nothing. And this is a good example is why we look at multiple markets. You need to look at multiple markets. If you're trading NQ and the S&P, you need to, or just one or the other, you need to keep an eye on the other one, its support and resistance levels, because one will turn the other one. Now, this obviously turned on news, but as a guide as to part of what you need to keep your eyes focused on, you hear, and I'm telling you why, here it looks like, hey, it's got a void. It should come all the way down here. Eventually, it might, based on the daily chart. But the Q is getting down to support and beginning to make a turn, and you're short ES, you better know what's going on, not to get blindsided. But if you've got your automatic stop in, you're going to be okay. YM, same story. Broke below the pivot, greater than 100% retracement. And this, I guess, news earnings has been stubborn about this M top breaking. It hasn't broken through the low of the red bar. So far it continues to go sideways. And Russell. Slowing momentum, distance between the highs, reversal bar, at lots of resistance. waiting for some other confirmation. It has been trending up. Oh, you don't want to, these things, as I said, they don't turn on a dime. So you don't want to get too aggressive too fast. And it may survive. Who knows? Can you imagine if the Fed decides, hey, we're not going to do anything, which seems highly unlikely. Only opinions about a quarter, but let's get things moving. Interest rates doing nothing. I'm talking about this retest, but everything's on hold. Everything's waiting here. And so transports came down a whole bunch, down to the pivots. See where they're at. And so you can see the metals here correcting. No big deal. Waiting to see if the dollar makes some kind of a move. Crude oil. So moving through here so I can hand it over to Dan. And so for the most part, we're just on hold waiting here. Dollar flipping back up here a little bit here. Didn't hit my alert, but keep an eye on this. Just set an alert. If it breaks out and, whether it's this or TBT, if you're keeping an eye on that, the ETF, if these two get through the highs, that's going to put more pressure on the markets. All yours, Dan.
Good morning. Nice turnaround this morning. We were down a little bit. So now we're just back to range bound. As Greg said, spinning our wheels here ahead of Fed. That was expected yesterday too. Let me go right to earnings here from yesterday. All right, starting right here, NXPI. Yeah, I'll get to it, Stephen. Gap down yesterday, fill in the gap, no pattern. And we'll come, but unless I delete them here, then we'll come back to them at 10:30 also. ARE, I can't tell where you're gapping, but breakout failure yesterday. PFG up 4 bars, but strong. ELS, I don't see any prints, but over yesterday's high would be a red bar ignored breakout. So actually, I'll set an alarm at 68.80 on this one, because you have a bullish weekly and monthly. Triple G. Hey, Thomas, is that General Motors or Good Morning or both? Kidding, but GM had earnings too. Triple G looks like a breakdown. Last week's low. Whirlpool. It's funny. I was looking at I read online digital Wall Street Journal, and you open up the main page and you can see all these headlines about this one blowing out earnings, this one missing earnings, and it said that there was a headline of Whirlpool lost money, and it's gapping up. So what does that tell you? Tells you that I don't care about the headline. So I don't care what the number reported is. All I care about is the gap in the pattern, because it's what, well, it's not BS, but I'm telling you what it is right now. It's BS as a trader, because all I care about is the pattern. But what reality is the movement is, as we know, it's what was reported based on what was expected. So stocks go up on bad news all the time, because the bad news wasn't as bad as the stock had predicted. So this is a put spread watch. This was actually, let's see, was this? Yeah, this one I don't call a core, but I call it a big old bottoming pattern on the weekly. That reminds me of Wayfair was on my, oh, this one rocked. This one was on my core watch list. but it already kind of made the first target. Alarm going off. We had Carvana. We did a put spread. That's gapping up. Looks great. HENC, it's extended. Don't know what to do. WWD, no prints, but I would prefer a call spread. This one looks fantastic as a 1, 2, 3 breakout. I'm going to set an alarm at 2340. Oh, I just saw on my other screen that you all do see this dialog box popping up. HP, Hewlett Packard, we did a condor. I personally didn't get filled, but somebody emailed me that they did, so I recorded it at a lower price. But we did a $5 wide, 55.60 and 42.50. It's opening relative down just a few pennies. Flat moving averages. This is an absolute beautiful setup for a condor. That's what I'm looking for. Flat MAs in a wide trading range. Cade, no prints. PCH, no prints and extended. Sanmina. I see one print up here, but there's no pattern and no volume. We'll come back. This has under 100 grand. You're gone. Wow, HLIT's getting beat up. Wow, that's to this prior low. HLIT. I'll put that over here and possible 30-minute high put spread. Hitty. Big old bottoming pattern, daily, weekly, monthly. We'll come back. Exxon. Breakout failure. Down a little bit. Pfizer, I have as a gap and snap candidate. Look at this weekly. I was hoping it would gap all the way down to this 4150 area. Here, I don't need 200 MA on the weekly. Let me just delete that. But it's down a lot near those prior lows. Let's see what it does. Back to the Wall Street Journal. So the Wall Street Journal said McDonald's revenue up on higher prices, new items, whatever. And there you have it. It's gapping down. But that's actually, we talked about doing a condor on this one. And I was tempted, but it just wasn't enough juice for the strikes we were looking at, but it would have worked beautifully. This also, it's a short-term condor, but I would not do it ahead of the Fed. Because this is in a tight trading range with all these converging MAs. The pattern suggests eventually, maybe in a week or so, it will break out or down and be tradable in that direction. The cat had another one, blow out earnings and gapping down. Call spread candidate. It's been on a tear though for a long time. UBS said they were making a lot of money, gapping down. MPC. Gap, I don't know, maybe day trade, whatever, but I don't like the daily. MCO, I can't see where you're opening, but it's bullish. Another oil down, no pattern though. Here's our General Motors. Gapping over. These gapping over 2 bars highs, very bullish. It's just not my setup, but it's bullish. No prints, MSCI. SYY, 30-minute low. 30-minute low is a short idea. No pattern. I don't like all the overlapping bars. A mo. No, big old bottom here. But there were so many bottoms that we traded starting January 6th on this market. It was a Friday, gapping down here. Corning, I don't know. I don't see any pattern. Dove, no pattern. Spot, yeah, it's gapping up, but I have no idea what to do with this. Look at that, closed right at $100 even, gapping up $9. So for you mathematicians, that's gapping up 9%. No idea what to do with that. IP, I was hoping this would have gone sideways for a couple, 2, 3 more days. But it's a gap breakout. It's a buy on a pullback, but extended now, bullish weekly. VST, nice short yesterday. YouTube is asking. Not my type of short for swing because it's in a little trading range here. We like kind of V tops and reversals. We did Honeywell yesterday. See the difference on this top compared to that VST? And we have as a new idea LMT. See that this is a more V top reversal at resistance. So LMT is a short idea. And Dollar General was in the weekend letter. We're in this. We covered a third into the close. I have it on a thumbnail, other computer, because I saw a little gap down here. So I'll be looking to cover another third. Alex, UAA alarm. UAA alarm. It's a little 1, 2, 3 here. 5-minute high. That's an idea. JWN alarm from yesterday. That looks good. JWN I like. 5-minute high. Big old void. Looks great. So those I like both of those. They're both little retailers. Why did I get filled up? Our Dollar General looks great. Oh, I got filled on. I had a GTC. I had a GTC on some things. I got filled on at Target. All right, Pfizer bottom right was on my Gap and Snap, but I don't like it now. I wanted it down more. I wanted more pain, and it's just rallying up to resistance. So let's cancel that as a long idea.
You mentioned pharmaceutical Pfizer. This Johnson and Johnson is getting near the prior pivot from October. I think it'll probably make a turn in the next couple of days.
Wow, that's ugly. IAA alarm from yesterday, so that's a go. One, two. All right. I like PNR fundies. PNR, yeah, yeah, it's a little gap and go. Dove, kind of got slapped around. Let's see if it can stabilize.